co-host. So let's let's start again from where we left off because time is running. So we all have our schedule and we respect each other's time. So Satish.
Yeah, I'm here.
Okay.
How do people know the new link now? Because they may be showing another link, right?
It's all good. Like the people will see that we are live, so they will see it on
Okay,
Twitter.
okay.
Yeah. So
Okay, fair enough. Yeah, go ahead.
okay. Yeah, it's all good. So Satish, let's go back to the question. So just a bit about your background and how did you end up in crypto and DeFi space?
Great. I will quickly revisit that. In fact, I started this company in 2016, and just for the history, Ether was about $8 and BTC was under $400. I was actually getting certified at MIT post my corporate stint, and while I started my company. So in the last 8 years, we did work extensively on trade finance and supply chain, and especially Kratos is well versed in the food supply chain, where we solved a lot of customer pain points uh, from 2018 itself, and that's exactly where we uh, we have rolled out Foodlands, and currently we are rolling out Ahan. So I'll talk more about that in depth, but in short, been in 8 years journey, a very senior company based here in Asia Pacific. That's my introduction. Thank you.
Cool. So when we go to the use case in brief, what actually inspired you to create Ahan and what gap in agricultural market did you aim to address?
Yeah, there's a bit of history for that. As earlier said, in 2020 we went live with one of our other platform called Foodlands during the peak pandemic. So Foodlands allows farmers to basically get precision agriculture data, and it allows them to record data on blockchain. So we have solved this and helped a lot of smaller farmers to get up to 18 to 20% more revenues. But the discovery that happened from 2020 to last year is that a lot of pepper and turmeric farmers, they were selling the produce at throwaway prices. We call it as a distress sale because they couldn't hold the produce and they needed liquidity. So whatever price a middleman offers, they would just sell it. And the cooperatives that are actually helping farmers couldn't do anything much. So they came back to us and said, why can't you help us with some capital so we could really buy the produce from this smallholder farmers, store it, and we can get more profits. So for example, a kilo of black pepper, they would have sold for $3 or probably $3.5 to a middleman. And all the middlemen are doing is that they have capital. Obviously, they could buy at whatever price that they deem fit. But then they store the same pepper for 3 or 4 months and then sell it at $6 to $7 per kilo. So we're looking at more than 50-60% profits what they're able to derive. And the crux of the issue seems to be the capital. And with all advanced things that happened last year and 2 years before, stable coins gained prominence, and we noted that the stable coin holders do not get more than 5% in yield. So we thought that's a way to marry both the sides. So we use stablecoin staking to be able to deploy the capital, solve the capital issue for cooperatives, buy at minimal support prices from farmers. Instead of buying at 3.4, we probably buy at 4.2 or 4.4 per kilo. And we still sell at $6 to $7, but we are solving the capital issue through the liquidity staking, which means whoever supports our liquidity pools by staking their stable coins, in this case like EUROE, we are in a position to give back up to 12% APY. So that is where win-win for both our parties here.
Cool. More about that in next questions, of course. So
Sure.
really, thanks for that answer. Can you also explain like the significance of integrating real-world assets, specifically with agro commodities, with DeFi? So like, what is the exact incentive there, or why do you think it's important?
I think to understand this, we have to understand simple terms like the real world assets, what people understand. Today, most of them think real world assets are tokenizing a real estate, for example. It could be a house, could be a building, right? Or they could probably tokenize an art. But the constraint having tokenizing a real world asset like real estate is that liquidity becomes the biggest problem. Tomorrow, if you have to really come back with the yield and come back and the token holders, if they want to maintain realized profit, the entire asset has to be sold, and that may take some time, right? But if you look at in terms of agro commodities, and we actually call it as a liquid real world assets. The reason why we call liquid real world assets is that imagine we have 100 metric tons of pepper lying in a warehouse. I don't have to sell entire pepper in a day. I could sell over a couple of weeks as and when the price goes up. For example, today the price is $6. Tomorrow morning the price goes up $6.4 and I have an order for say 20 metric tons. I could sell because that yields more profit and we're not dependent on anybody to sign off on that. The asset belongs to Ahan because we've already purchased this from the cooperative, so we don't have to take the permission. So the liquidity becomes much easier. The profitability of it becomes much easier. And the third point is it's totally tangible. You can clearly prove that there is pepper in a warehouse, which is now backing the liquidity pools as well as tokenization that we have created. That way, first thing we are looking at full tangibility. The second point we're looking at how we are able to support a social impact, right? So if we are helping farmers by buying directly from them, we can also make sure that they get incentivized. We get repeat. We have an opportunity to buy repeatedly from the same farmers every 6 months, every 1 year. And the third thing is that it's totally traceable. All the data is on the chain. So anybody that puts in say 100 euro E as liquidity pool, we can make sure that we guarantee their capital plus 12% with all the risk management and insurance that we have created. So that's where I believe agro commodities will have a greater play in the next couple of years, and we are probably the first one in the world where we are attempting this now with Ahan.
It's very fascinating to think about. Like usually RVAs are associated with like real estate exactly, but
Correct.
now when you bring like this aspect of farming and like how big the market is and everything,
Yes.
it really opens like a lot of opportunities in a sense. So let's say like if you would pitch Ahan like in 2 minutes, like what would be the brief overview of what is it and how it works?
Sure. So most of us, we have heard about Lido. Lido has been successful in the last 3 years. So just to give perspective, Ahan is like Lido. Instead of staking Ether, we allow users to stake stable coins. On one hand, Lido basically uses this Ether to lend it to the validator nodes, and whatever gas fee they make, they share it with the liquidity providers. So they get up 3.8%, up to 4% APY. Whereas the differentiator with Ahan is that because we deploy stable coins, we don't have any fluctuations. We take $1 or we take €1, we deploy that to buy the pepper or any of these commodities here we're talking about. And the second thing is that once we deploy the capital, we are in a position, unlike a digital asset, we are in a position to really prove it with a tangible asset like the pepper. Plus, the advantage is that we can get up to 30% profits. And this is nothing invention from us, it's a discovery. It's been happening for thousands of years. When spices were actually considered as a liquid gold, it was traded across the world. We are using the same pattern of trading agro commodities on exchanges. We sell forward contracts and we make sure that the pepper is available in a warehouse. That allows us to even fractionalize those assets until we sell it. So we're in a position to actually create a real liquidity staking solution, which means if somebody puts in Euro E today, say for example 100 Euro E, they can actually get daily staking rewards. Plus, if they want to take back the liquidity within 2 days, we allow them to take back. It's a pure liquid staking solution as compared to other solutions there where they'll be locked in for a couple of days or months together. So that's the basic difference.
Okay, cool. So you covered you mentioned pepper a couple times here. I would like to ask, like, what types of non-perishable agricultural commodities can users gain exposure to on the platform?
That's a good one. Today, when we talk about non-perishables like spices, most of things come to the mind is black pepper, turmeric, cardamom, cloves. But we would start off with this next initially. Once we get the process right, we will also want to get into cashews, almonds, and walnuts, and then followed by grains. That would be the last one. For example, we could go for millets, probably 3 years down the line. But for the very first 2 years, we really wanted to, you know, look at this process of only staking on pepper and turmeric. That's the initial exposure, continued by you know walnuts or cashews or any of the grains that can happen in 3 4 years down the line. That's the plan.
Okay, got it. That sounds pretty fascinating. Could you explain how staking process works on the platform? Like you touched upon that a little bit, but maybe more in detail, like maybe step by step, how exactly is going to work?
Sure. I'm happy to go deep dive. So a couple of things that are very much interesting for a liquid staking solution is that first of all, there's no lock-in period. That's point number one. So what we do is that if somebody has 1,000 euros, Euro E's lying in their Concordium wallet, they can come to Ahan platform. They connect their wallet, and the moment they want to stake, the platform gives an option out of 1,000 how much they want to stake. Let's say they choose 100. So the moment they sign the transaction, we actually mint 100 liquid Euro E tokens. We call liquid staking tokens. So that are given back to the user, and that can be further restaked to get to compound their returns. That's the first step. And then every day they can log in to the platform and check the daily staking rewards. It's normally 12% APY. So if they put in 100, they'll get a minimal APY every day. So they can choose to withdraw that on a daily basis, or they can choose to withdraw on a weekly basis or monthly basis. That's a user's choice. But when they decide that they want to get their capital back, which is 100 Euro E in this case, they will have to return the 100 liquid Euro E's what we have given to them, the liquid staking tokens. So once we unstake that, they will get back the capital, 100 Euro E's, and the platform would burn the 100 liquid Euro E's, because those are actually given as a collateral as part of the initial capital gain. So in simple steps, you give 100 Euro E, you get back 100 liquid Euro E's. Same liquid Euro E's can be restaked on in the ecosystem to compound the returns. And as long as they have put in the liquid Euro, they put in the Euro E's on the platform, they are eligible for daily staking rewards. And after say 7 days or 10 days, if they want their capital back, they can return the liquid Euro E's and get back their original Euro E's. So basically, they'll get their capital plus whatever the proportionate APY they will get back for the 7 days. That's easier. We don't have any lock-in period. So somebody that has money 1,000 euros today, they can just park for 2 days and take back the money after 2 days also. So it's a true liquid staking solution that we have built.
Okay, thanks for the deep dive. So you touched upon like Concordium wallet and Euro E as like some of the stack there. What made you decide to utilize like Concordium's technology, and how CCD token may be utilized in the platform?
That's a good one. And stuff. Just go on the technical side. I want to really touch upon why we went to Concordium. In the last 4 to 5 years, when we have actually started helping smallholder farmers, our vision was more on the sustainability and UN Sustainable Development Goals, UN SDGs we call. For example, SDG 1, 3, 7, 13, where the focus is on reducing the poverty for food producers. So when we start looking at various layer 1 protocols out there, the Concordium caught our interest because they are very much pro ESG and pro SDGs. They really want to support sustainability, and the long-term financial inclusion. So it was in line with our vision of helping farmers through Foodlands as well as Ahan platforms. So that's exactly where we approached them last year and said whether we could start rolling it out. That's how it started. So it's purely more on the vision that we share together, that we have embraced Concordium as a first liquidity provider, as L1, first L1. We also support multilingual, but very first implementation would be on Concordium very soon. Q2 2024 we're planning.
Okay, cool. Thanks. And since we're talking about tokens here, maybe I know there's a white paper available. It's 3 pages. Could you delve into the token economics of Ahan DAO and what makes it attractive to investors and how investors capture value?
So we have approached this in a different way, right? Because for any liquid staking solution out there, we have to maintain enough liquidity. So our promise to our investors, our LP providers, is that for every 1 euro E they stake, we always back it up with 1.4 euro E's or 1.4 USD, which is always 1:1.4. Normally the industry standard is about 1.2 or 1.3. We really wanted to make it as a very, very safe, like a AAA rated kind of LP, where we want to manage 1.4. So our idea is to raise about $152 million. And the maths around that is that $140 million or approximately 92.1% will always be in a cold wallet, for example, in Switzerland. That will act as the backbone of the liquidity that we raise. So which means we aim to actually run up to 100 million in LP pools at some point of time, which we need about $140 million in the bank or in a cold wallet. So we are coming out with about 1 billion Ahan DAO tokens. Every token holder would have to, we can vote for any changes that comes in. We are trying to create a deflation, which means only 28% of tokens will be sold, which is about 280 million tokens. In different tranches, we start off with say probably 5 cents per token, then we go up to $1 once we are really live. So that gives us enough liquidity to put in. And we are also introducing custodians, because for any RWA project to be successful, we need to have an independent custodian that holds the produce in our case. So in our case, the paper. So what we are mandating is that anybody that wants to be custodian on Ahan platform have to buy the tokens and stake them. The reason is if they try to defraud the system, they lose the entire tokens. It's similar to what's happening today in Ethereum 2.0, where every validator has to put in 30 Ether. If they make a mistake, they lose all the Ether. We are doing the similar thing for our custodians. So 8% of the token, about 80 million tokens, will be sold, and they'll be always staked or locked in the system. So if anybody makes a mistake, they lose all the tokens, which means that we don't see any fraud happening on the platform because there's a risk and reward that we created. And only 12% we are setting aside for the founder and the team. They'll be locked for at least 18 months, so they cannot sell. That's making sure that nobody pumps and dumps the token. And 7% is set aside. We do not foresee any airdrops, but rather we are introducing something called as a rural ambassador program, because we need people on the ground talking about Ahan to be able to onboard farmers. So for all the effort they put in, they get paid in tokens there. And that's how most of the tokens will be in reserves in the Ahan Foundation in Switzerland. So that's how the makeup. So we are going to update our website. If you can go to Ahan.fi, you will see today we can see the white paper, but very soon we will update to show also how many stages we are planning to do the token sale, what is the breakup we are trying to do. I think we are the only first company in the world where we are saying 92% of the money raised will be locked into a cold wallet. So that should give a stability of the platform for next 10 to 15 years. So that's the plan.
Yeah, thanks. That's been pretty transparent kind of explanation about how the token economics work. Of course, if the community has any questions, like you can add in the comment section below. But Maybe I would like to ask, what is you touched upon the rural ambassador program. So is that the only like growth approach that you're going to use, or is there some other growth tactics or strategies that you're going to utilize to grow the platform?
Yeah, that's a good one. Thank you for raising that. So if you look back, the amount we want to raise about $152 million. Out of that, $6 million we are attempting to use in marketing. So that could have potential airdrops and bounty programs that we are putting. That may be in pure euro year USDT, or because we don't want those tokens to come in from Ahan DAO's perspective. So 7% of the tokens are only for rural ambassadors, but out of that initial $6 million, we might start doing other types of airdrops or bounty programs to be able to gain more people onto the platform. The second, the customers for us are more of the liquidity providers. We'll probably run different campaigns to give them initial some of the EURs for them to start staking. Some bonus we can apply. But again, as we speak, there are a couple of marketing strategies our team is working, but it's too early to talk about it in this forum at the moment.
Okay, thanks. So if we talk about security measures and risk management strategies, what type of measures or strategies do you use to protect investors?
Correct. I think that's very, very important with all the hacks that happen at the moment. So one of the main, again, we bring in our 8 years of experience within from Kratos itself, where we have dealt a lot of advisory on this front. So a couple of things that we want to do. Definitely, most 92% of the tokens will be in a cold wallet, so they are not open for any hacking attempts. The rest of the tokens that are available, say 28% of the tokens that are in circulation. So that's again with the custodian wallets with the users who bought this typically. And the third thing is that we are coming out with because any liquid staking solution we need to have regular audits. So we will do the audits regularly. And the third point is that we will not touch any of the reserves, but we will basically whatever OPEX revenues we make, we will keep on deploying back to make sure that entire platform is highly secure to thwart any of the hacking attempts on the liquidity pools. And whenever we run an LP, we are going to have separate wallets. They're not linked to a single point of failure. If you're running a LP for $500,000, there's a separate treasury wallet and with all the hardening that we do, so that we make sure that at any point of time, even if we are compromised, we don't have more than exposure of 0.5% or 0.25% of the assets at any point of time. So that is how it has been architected.
Okay, super cool. Like, especially the cold wallet, I think, already solves a lot of the risk management issues there. How does the 2024-2025 roadmap looks like for Ahan? So if you would break down like the biggest milestones that you have planned so far.
I think our ultimate aim in the next by end of 2025 or early 2026 is to be able to run about 100 million in liquidity pools, but that's not going to be easier, because we have to prove the to the team. So initially we are definitely starting small. The very first tranche we are raising through token sale is about $2 million. Out of that, we will deploy $1 million in liquidity pools and raise, which means we'll have our own funds deployed to buy the paper and to prove it to the world. So once we prove that it has been successfully run, so by this end of the year, I think we'll have testnet ready by Q2, and by Q3 we'll go live initially on Concordium, and then by next year we would have really gone up to say about 10 to 20 million dollars in liquidity pools, and by end of 2025 we are hoping for 100 million liquidity pools to be ready to be running not only in India. The idea is to start from South America, Africa, India, China, Indonesia, all these Southeastern countries where agriculture is the primary GDP driver there. So that's our plan.
Okay, super cool. Just for the context, how big in terms of numbers is this agricultural commodities market?
When we did the research, there are a couple of things, right? If you look at agro commodities, there are perishables and non-perishables. So we looked at agro commodities market about 13.1 trillion as of today, and out of that 1.2 trillion is a non-perishables. That's where our focus is. In terms of market that we can achieve about 2 to 4%. So our market size we are aiming in the next 10 years is about $61 billion. What we want to tokenize on Ahan. So that's ambitious market size we want to capture. Again, as I said, it's not only limited to one country. Ideally, it should be totally decentralized. That's the reason why within the architecture we have put in custodians. So if you can get a proof of, say, pepper or corn or whatever in some warehouse in Africa, anybody can still tokenize that on Ahan platform, be able to raise capital and then return the capital debt. So that's our whole idea.
Okay, cool. Yeah, it's a very big market. It's hard to imagine how big it could in reality be for someone who doesn't study this. Maybe so. We came to the end of our AMA questions, and at this point, I think we can delve into Q&A from actually the community. So I already see someone like Caroline is looking to.
Yeah, sure.
Or requesting to speak. Maybe I will invite her to speak. Oh, she left. She left the meeting. But if there's anyone else who wants to ask a question, this is the time to shine. You can either unmute, ask to speak, or you can just comment below in the comment section. So let's take like a moment to just wait for guys to unmute themselves or join the stage, and then but in case there's nothing, then Satish, please, if there's any other announcements you would like to make here in this AMA, it's your chance to do it.
Yeah, great. Yeah. I can stay for a couple of minutes if somebody wants to ask questions, but overall, I think we have got the validation on what we want to do with Ahan. I think it's an effort for last 6 to 8 years what we put in, technically an extension of our other platform that we have created. But right now we are making it much more official to do the tokenization, do our token sale, and be able to help at least about. So in terms of market statistics, there are about 500 million smallholder farmers out there, and out of them 70% are unbanked. So idea is to really create a social impact on as much as possible in the next couple of years through technology. And of course, every technology comes with its own challenges. We are not jumping on the bed today saying that it's going to be the most successful. Last 8 years, every platform that we rolled out, we have always looked at a fast fail approach. So that's the reason we're not raising the entire $152 million on day one. We're actually raising $2 million, and out of that, 50% will deploy on our own LPs to prove the model to the market. Once it's all successful and we are clear on the operational side of it, why I talk about operational side is that 70% will be on chain, and 30% we still have to do the operations of physical movement of goods, selling in say food exchanges there and be able to get back the money. There are challenges of converting from crypto to fiat and then fiat to crypto. So since we want to be totally regulated company, so we're also take some baby steps to get the legality right in the countries that we operate. But once we have the process ready, I think then we raise next $10 million. Then we raise about 40 million and next $100 million. That's the plan. So that we don't want to take all the money and not able to execute. So that would be too bad for the ecosystem. So we're also looking for support from a lot of people that could advise us or also support our fundraising programs. That way we could build the technology with total security and roll it out. So that's a very very near future plan for us.
Okay, cool. So on that note, thank you all for joining us today to talk about Ahan and how it connects to DeFi and things like farm goods. And I really enjoyed this conversation. It was very very nice. And big thanks to you, Satish, for sharing the knowledge and plans about Ahan's future. I'm really excited how this will grow actually, and how the DeFi world can actually help farmers to make things more stable, more clear. Help the unbanked people. So that's super cool. So on this note, if you want to learn more about Ahan or Concordium, just check out our website, concordium.com or ahan.fi. Also, make sure to follow Concordium and Ahan on social media. So the handle on Ahan handle is actually in this at Ahan Web3. That's the official handle on X, and then Concordium Net is the Concordium's handle. So there in these channels you will find all the updates and everything you need to know about the projects. And yeah, thank you again for the time and interest. Let's keep on exploring this exciting space, and it's lovely to see our commercial department bringing us these use cases, and I wish you all a great day, great rest of the weekend, and whenever you are, hope to see you again soon. So
Thank you everyone. Thanks for taking time. Bye bye. See you.
Bye bye.